Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, yesterday the Australian dollar bears abandoned the downside challenge at 70 cents, which gave enough momentum to impulse up towards the current highs today around 70.62. Now it is assessed that further weakness is expected, that the midway point on the RSI didn't break above 50, and still with the MACD holding to a negative stance, I do believe that market will take another challenge down towards that 70 cents, given by the technical implications, and therefore a break beneath there would give further scope down towards the objective, which is around 69 figure 45. I do anticipate that from the bearish outside range day, a declining trend and also the 60-day moving average is all added up to the bearish sentiment, which does impose a further downside potential challenge. But we do need to see a clear break of 70 cents to give further exposure to the region of 69. The euro, well, the market didn't quite get to that point of 116 figure 10 yesterday after the dollar slipped beneath the 94 handle, which is the DXY, which measures the greenback strength against a basket of 6 major currencies. It is assessed that further risk is to the downside, but still keep on your guard because we still have quite a lot of events into this week, and that being the US presidential election, also the FOMC rate decision, and then we have non-farm payrolls on Friday. So many events that can give volatility to the market, and especially from the technical point, the bears are still holding as the ADX is trending and strengthening, and therefore if we get a break of 116, does give exposure down to 115.30 and reassess from there. The dollar yen, well, the market since the bullish divergence is strengthening, so we've got bullish divergence, a bullish outside range day, we've got a bullish dragonfly doji. I do anticipate the market should climb further towards 105.45 and reassess, and let's see if the market can extend that to 106. Breaking for the midway point and with the MACD increasing to a slightly bullish tone, therefore could see further upside potential. This may see a little bit more pressure when it comes to sterling yen, but we didn't quite get the break of the sterling leg. Nevertheless, we're still looking at 134.40 for the sterling yen. But yesterday, sterling took a stab at 128.70, but no follow through. We're still in a bit of a downtrend here. The lack of momentum and the MACD holding negative should give us at least one more test into tonight. Let's see if the market can take out that 128.70 and give exposure down to 125. Gold is attempting to recover into the eve of the US election. Now, I believe the market needs to close above at least 1,898, which would give further scope up to around 1,912, or up to 1,936. Now, 4 years ago, we did see an increase to the upside, but it didn't sustain, and this pattern might repeat again. So do be on your guard. Volatility will increase, and no doubt we could see a spike up to 35 and then a drop back down to 50. That's pretty much how I view it in the terms of the next 24 to 48 hours. Market is displaying a very strong key reversal last night in oil, and from that does give further indication because we have closed above this previous candle, giving confirmation to the bullish candle that we're looking up to about 39 to about 40 or even 41. Nevertheless, we'd like to see a little bit more follow on further to support these indicators to match up with the candle. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report and I hope you enjoyed a great start to the day.